price objective of 27 USD has only just begun. So we believe it still has a long way to go. We believe that this initiative, which is currently the largest AI effort in the world, is greatly underestimated. We are prepared for the transition in consumer preferences toward better, more affordable electric automobiles by simply passing cost reductions on to its customers. Tesla is driving that price fall. Hi there, fellow investors. Which should I make an investment? Fortunately, the solution might be just around the corner. Today, we're uncovering a secret that investors around the globe have been waiting for, ready to find out when is the best time to purchase Tesla stock and possibly win millions of dollars. The wait is now over after a long period of suspense. Join us as we go deep into Cathie Wood's latest revelation. We'll get into the specifics of Tesla's stock, the variables influencing its possible rise, and why this might be the once-in-a-lifetime investing opportunity. Watch this space as we reveal this revolutionary realization that has the power to alter the trajectory of your investing career. This is the key to opening up a world of opportunities in the future, not simply another stock analysis. Prepare yourself for an exciting financial journey. This is Tesla Stock News, where wealth meets opportunity. Remember to ring the bell for notifications and hit subscribe. The path to millions starts right now amidst backdrop of difficulties encountered by other organizations. Tesla stands out as an exceptional exception. This week, we're concentrating on Tesla's distinct market position, subject that has been attracting a lot of attention. Now, let's explore Tesla's dynamics. When we compare Tesla's market valuation to its production volume, we find an interesting contrast for the firm that is well known for producing state-of-the-art electric automobiles. The numbers are astounding, particularly in light of other industry participants. According to recent estimates, Tesla's long-term projection has been significantly revised upward. However, many still think the business is undervalued. Two fundamental presumptions that have lately evolved are revealed by changing views. Previous forecasts suggested that Tesla may drop to a third of the market. In contrast to what was anticipated, Tesla's global market share, which includes the Chinese market, actually grew last year. This ascent outpaces the arrival of purported Tesla competitors from well-known manufacturers like Jaguar and Audi. But this is a critique of the larger auto business as well as Tesla. Now, a lot of well-known automakers are finding it difficult to switch to electric cars. Their incapacity to effectively adjust to the changing demands of the market and their trailing battery technology are clear indicators of this battle. Let's now discuss the economic ramifications. The price of electric vehicles is predicted to fall below that of gas-powered automobiles for the first time in the next 18 months to 2 years. Because battery prices are dropping, this trend is probably here to stay. There's a vital turning point for traditional automakers whose capital is still heavily invested in internal combustion engines. Since the situation was so dire, Tesla received an invitation to erect a sizable factory in Berlin, Germany. This action shows that the industry has realized it must quickly adjust or risk suffering a large loss of jobs. Now, let's talk investment. Tech stocks have had a spectacular year in 2023. One such company is Tesla, whose shares have increased by an astounding 110 as of early August. This increase is consistent with the 34 annual growth of the NASDAQ Composite Index. It's not just Tesla, though. The industry has grown significantly. Thus, investors still need to decide if Tesla is a stock to keep an eye on 2023. The answer is found in the company's performance as well as in the larger context of the market's reaction and the industry's evolution. For the time being, let's concentrate on Facebook and Tesla. Both businesses have shown incredible resiliency this year, reflecting the resurgence of investor interest in growth equities. This follows a difficult 2022 in which a number of preferred stocks experienced a sharp decline, with some seeing a decline of up to 30 to 40. Even though they can be frightening for some investors, these kinds of swings are typical in the stock market. The incredible 110 increase in Tesla stock price in just 7 months in 2023 is a clear example of how volatile the stock market can be for investors with a seasoned eye. This enormous rise is evidence of Tesla's strong performance and investor confidence. But this quick expansion also highlights a crucial feature of stock market investing. Volatility is unavoidable. Investors with experience are aware of the stock market's cyclical character. They are aware that even the most prosperous businesses, such as Tesla, occasionally have downturns. A number of things such as market corrections, economic downturns, shifts in investor attitude, or difficulties unique to a company can cause these downturns. A firm at the vanguard of innovation and technology in the electric vehicle market, such as Tesla, may experience swings as a result of shifting regulations, competitive dynamics, or technological advancements. It is noteworthy that fluctuations in the stock market are an inherent aspect of investing. High-performing equities can see substantial drops in value, as well as frequent rapid spikes in value. For instance, there have been times in Tesla's history when the stock has seen significant value declines over brief periods of time, which has been indicative of the market's response to a variety of internal and external variables. A seasoned investor employs a strategy that incorporates diversification, a long-term outlook, and a comprehension of the underlying business. That a brief drop in the price of a fundamentally sound business presents a chance to expand a position in the stock at a discount. As we dig further, the question of whether this is the perfect moment to include Tesla in your portfolio emerges. This question is especially important for people who haven't made any Tesla investments yet. However, as traditional automakers are just getting started in the electric car sector, caution is suggested before writing them off. Tesla has a competitive advantage for a number of reasons. Firstly, their technological progress in batteries. Second, their in-house AI processor puts Tesla 4 years ahead of its rivals in semiconductor technology, according to our expert James Wang, a former NVIDIA employee. In the drive towards autonomous driving, where data is king, this is critical. With a vastly superior amount of real-world driving data, 14 billion miles, than its closest rival, Tesla, last but not least, Tesla stands out from other automakers thanks to its special ability to provide over-the-air software updates that improve car performance. Despite Tesla's stellar financial results, the firm exceeded Wall Street forecasts, bringing in $25 billion in revenue and 78 cents in diluted earnings per share. It's critical to examine the business's past struggle. Interestingly, Tesla's gross margin decreased significantly year over year from 25 to 18. Investors are concerned about this reduction, which emphasizes the challenges Tesla is facing in a market that is changing quickly. There are multiple reasons for the decline in gross margin. The company's choice to cut pricing is one of the main causes of its automobiles several times a year. This tactic was used to boost demand in the face of rising inflationary pressures and interest rates, which both have the potential to reduce consumer spending, particularly on expensive goods like cars. Lowering prices can increase sales volume, but they also have a direct effect on the profit margin each vehicle sold, which lowers the gross margin as a whole. In this case, the backdrop of growing interest rates is very pertinent. Demand may decline as interest rates rise because financing large purchases, such as cars, becomes more expensive for consumers. Another important factor is inflation, which reduces customers' purchasing power and causes them to be more frugal with their money, especially when it comes to luxuries and non-essential purchases. Tesla's approach to these economic challenges displays a clever balancing act. Reducing pricing has the ability to increase market share and sales volume by making their vehicles more affordable. It's important to take the larger economic environment into account when examining a company such as Tesla. Consumer buying power is impacted by the current economic environment of high interest rates and inflation, which influences the choice to buy expensive goods like electric vehicles. Therefore, it's critical to weigh our enthusiasm for Tesla's technological innovations against a sober appraisal of the market and economic realities as we appraise the company's current standing and future possibilities. Prominent investors such as Warren Buffett advocate for a balanced approach, which is essential for making well-informed investing decisions. Given the state of the economy, people are reconsidering big expenditures like cars. As a result, Tesla deliberately extended discounts, move that increased sales, but also had an effect on their gross margins. This is, however, a bad move. Not always. The wise man of finance, Warren Buffett, has always stressed the value of adjusting to the state of the economy, and Tesla's price policy is consistent with this out. But other factors are also having an impact on Tesla's finances besides its price. One major contributing factor has been the company's research and development spending, which surged to an astounding $943, up 41 year over year. With this expenditure, which totals nearly $1 billion in a single quarter, Tesla is demonstrating its determination to remain at the forefront of the electric vehicle competition. Though it's a bold move, such high expenditure might cause some concern given the company's present profitability. This billion RD expenditure is not only an expense, rather, it is a calculated move to keep Tesla at the forefront of the industry, which is crucial for both Tesla and its investors. Considering the bigger picture, Tesla has quickly become a major player in the automotive and technology industries. Its inventive designs and progressive methodology have caused a stir. Tesla is gaining a cost edge in the manufacture of cars as a result of its manufacturing investments. This stands in stark contrast to established automakers like Ford, whose EV units are still struggling to turn a profit. Renowned industry expert Cathie Wood had anticipated this situation, stating that it would be difficult for conventional automakers to compete with Tesla without suffering losses. The foray into autonomous driving by Tesla is another fascinating chapter in the company's history. Elon Musk sees a time when complete autonomy is attained for self-driving cars, even though they still require driver attention and intervention when needed. This might eventually justify Tesla's stock price by turning the company into a provider of robotaxis, a market with immense potential for revenue and earnings growth. When considering Tesla's long-term potential, its short-term variations in gross margin, profitability appear insignificant when seen in the context of the larger picture. Elon Musk was confident that autonomy would transform the company's finances at this year's Q2 earnings call. Even if Musk's aggressive timeframes have previously been questioned, it has been difficult to bet against him. There you have it. The image of Tesla's voyage through 2023 is complex. On the one hand, we witness outstanding financial results, such as revenue that exceeds projections and a notable increase in stock value. Conversely, the business faces difficulties, including diminishing profit margins and the requirement for tactical pricing changes in reaction to financial strains like inflation and growing interest rates. Important questions for investors and market aficionados are raised by these dynamics. What is the impact of Tesla's price policy on its profitability in the long run? Can the business continue to lead its market despite these economic challenges? Most importantly, how will these factors affect